TGIF face, how's everyone doing? How do you feel about the NFP? Well, this is what I think. NFP, no frickin' problem. Bring it on. Everyone ready to react to the reaction? You know, it'd probably help you if you had some of these technical areas that you get as a subscriber. So let's see, you have a half an hour before the NFP. And you know, you get to hear Amanda announcing our webinar online. So you have a half an hour to see what all the five guys are thinking in here. And it's interesting, we've been talking about this on Twitter. Why would anyone sign up for Elliott Wave or separately harmonics or whatever the methodology is and pay the same or more for one methodology, one analyst instead of five? And not five average guys, some pretty talented trading minds. Okay, good weekend and the end of the year to review if you're happy with the account you're trading, the broker you're trading with, if you like the fills, if you like the leverage. So you get all of these push alerts as a member. So give Trent and Justin a call. They're sponsoring this webinar so you guys can listen to us every day. I know a lot of people get a lot out of face. So, you know, even if you're not a subscriber, you could call Forest Park FX and find a way to get a rebate from your broker, especially newer traders who are not aware of that there's a piece in it for them that you could use either to pay for your subscription or get a check. Okay, so, all right, let's get to the markets here in front of the NFP. And I know Blake wants to get out of here before the number. On Fridays, I reflect on the week, you know, because how we close this week is how people voted with their wallet. So I look at the dollar index and it is about 40 points lower on the week. 97.20, so 35 lower. The off number is 96.94. We're 10 under it. So this could be a pretty important number, especially if we take out, Blake had a number of 96.40. That would be the first danger signal that something's going on. And as you can see yesterday, we tried to put in a higher low. So we'll see if we're just going to roll over on this. Someone want to talk to me? Okay. And compared to the dollar, the US dollar yen had a pretty negative week. I know it recovered with risk coming back yesterday, but you know, much more negative week than the dollar did. And I tweeted this, take a picture. There's a pretty classic 3-drive in US dollar MEX. Okay, pretty negative candle yesterday and really not coming back much. So, you know, the top may be here. You know, we took out some stops over these highs here. This, you could probably risk all these highs here over 21, but now it shouldn't take out the high of yesterday's candle. Something else to consider, you know, even if you missed this, it may just be starting 1980 is possible. You know, get some type of fib retracement of this wave. Okay, and the S&Ps, I forgot the name of the ride in Disneyland, something, you know, Mr. Toad's Wild Ride. But I tell you, it's a trading paradise for scalpers and day traders. But if you're a position trader, you probably feel like you've entered the twilight zone. I got a little update from Peter. Peter was talking yesterday when we were selling off that we only had a 3, but then it turned into a 5. So he's not looking for 28.40 anymore. Maybe just a bounce. And then we start to finish some things off here. Yeah, the USD CAD's where all all the action is. I agree with you. Okay, so VIX came off pretty good. But, you know, this is starting to look like a flag. Last week, the way we closed before the sell-off, anyway, last week, I thought we might see 14. I talked about it with Steve, but, you know, this looks like a continuation formation of this spike as long as we're above 16. And say 10 to 28 is 18. And so 18 from here is 34. If you want to get real bullish, you tack on 18 over this high and you get a 43 VIX. So washout still may be coming there. And Bitcoin continues to wash out. I'm starting to get interested. Let me buy a Bitcoin related ETF. Don't say anything, Steve. Okay. Oil held yesterday. You have to, you know, give it credit. Held yesterday, trying to hold here, looking more and more like a bottom. And gold, you know, gold's interesting because this is a major breakout if we start closing above here, but it's struggling up here. And in fact, one of my favorite formations is developing in gold. So, you know, pretty good day so far, but check it out. One. Yeah, I know. One, it doesn't distract me, man. I'm so focused. But you see this? Yeah, you know, you hear me hesitate. Anyway, 1, 2, and maybe 3 at a major breakout. I mean, if we weren't at such an important level, but you know, risk reward, it might be worth a shot up here. So everything's going to come down to the dollar. And I just want to give you guys, if you're trying to trade the euro, here's a question I pose to you. Okay. I think there will be a time to trade the euro, but in here, right? Here's the picture, right? So yeah, you're right in the middle of, I don't know, I'll ask Steve what kind of formation. Symmetrical triangle. You could see that we're starting to converge and energy is being built up as we compress in here. But
I think might be an ideal situation for somebody that plays
volatility.
options to buy a straddle, eh?
Yeah, you buy calls, you buy puts, and you know that on the break you're going to be right on one of them. And if there's enough movement, you'll more than recoup the losing leg of that volatility spread. You know, I've never tried one. Have you?
Yes, we've played straddles in the past sometimes.
Oh,
yeah.
okay. I had a hard time accepting that I had to be wrong on one of them. Isn't that crazy? Huh?
But
I mean,
that's what is crazy because it comes from the guy that has said that you know, options are like relationships. 90% of them expire worthless.
Well, how do you think I know that? I didn't just make it up. I lived it. I owned a lot of those. So anyway, let's see if Blake wants to get in here because I know he wants to get aggressive and exploit the markets on the NFP. What are you looking for into it, Blake?
You know, well, hey, good morning, guys. Hey, Steve. Hey, Stelio.
Good morning, Blake.
Stella, I'm sure Stelios is there too. Hey, Coach.
It's our television show.
Good morning. Good morning.
Good morning.
Welcome to the Johnny Carson Show.
Yeah, so it is. Let me find. I can't even find myself here. Okay, there we go. I was looking for myself on the.
That's okay, Blake. You know, I'm in my 60s and I haven't found.
You know, oh my God! So last night, I just kind of like left the markets alone, and I watched a movie called The Last Movie Star with my wife. And it's about Burt Reynolds, and it's a movie done just before he passed away. It was actually really good, and it really kind of shadows his career and you know, he was like this huge actor as I was a child, and so I was, you know, interested to watch the movie. It was actually really good. Very, very good flick. Anyway, because you're talking about No, I think you have to. Well, I got it on Netflix, but
Okay.
But I
Yeah,
ordered the DVD, so it's not like it doesn't stream.
Yeah.
I've been a Netflix subscriber literally 18 years, maybe.
Yeah.
Something like that. I know I'm one of their first subscribers. So
Yeah.
when I say first, probably within the first 10,000 subscribers they've had, and so I've been on their get DVDs and streaming plan for forever. So
it's called being a idiot.
Huh?
It's called being a idiot.
Yeah, I guess so.
Videos, and you're so immersed in videos. So
I love movies. I'm a big fan of movies. So and I don't get to watch them that often. It's usually reserved for one weekend night. I'll watch a movie. But last night I was just kind of wanted to decompress a little bit. So
I'd like to come back as a movie star. What do you think?
Well, the movie's actually pretty good. You should see it. It's a good movie. Especially if you're a Burt Reynolds fan, or even though he probably wasn't the best role model as a person, I really enjoyed him as an actor, just as a kid, because he was so popular when I was in the 70s and 80s. But anyway, so as far as the euro dollar goes, I think we can actually rule out this inverted head and shoulder pattern. I mean, some people will still look at it as such, but it doesn't really matter at this stage. We're
taking too long.
It's taken too long, and you can see the triangle's completely developed and very well, very well developed. And you'll hear people that say that if we have a triangle pattern, they tend to be terminal patterns. It means the move out of here, if it's lower, will be the last move. But I still look at like the euro and the dollar as well, the dollar index as well, is that we see a lot of divergence, but at the same time, relative strength is mid-range. So now it really is a flip of a coin, if you ask me.
Everything's mid-range.
Everything is. So the euro, 114.20, 114, 113 support, and that's it. I mean, you gotta wait for a breakout here. And remember, on Tuesday there's going to be the Brexit vote, and by the way, they said that the Brexit vote is going to go through. So meaning they're going to go ahead with it. So
yeah, she tried to extend it again, did she?
Well, that, and some people thought that she might postpone it and try to negotiate some more, but it looks like it's going to go forward on Tuesday, and that's going to be really do or die for the cable, and frankly, it's probably going to influence the dollar quite a bit. So because if the vote fails, the pound's going to get probably slammed through the support, probably be trading close to 125. And that's going to be bad for the euro, any which way you slice it, because a deal not getting done between the UK and the Eurozone is going to be the euro is going to have a knock-on effect. That's
interesting, Blake, because everyone's mainly thinking that the blowback is going to be on the UK and Europe comes out,
No, I don't think so, and I don't think so, and I might actually not trade the pound and just trade the euro as a result. So, that's something else that I'm thinking. But anyway, so I don't know if we're going to break out of this range today. I hope we have some sort of blowout number, whether it's a weak number, good number, whatever. It just something to jolt the market and give us some volatility here. If you look at the Aussie, I mean, the Aussie's trading so heavy. So is the Kiwi as well. With equities rallying the way that they rallied yesterday. Now I know we're pulling back a little bit today, but equities really bounced. When I say rally, they rallied off the lows. I mean, this is like a V-shaped recovery off the lows. With that rally here, I'm surprised that the Aussie was so weak, and same with the Kiwi. They really didn't capitalize on this move in risk. So that's something to keep in mind as well. Meaning that I think the dollar's just really struggling here. Now, if we go to the Canadian, so I do have some Canadian longs. I actually shorted the dollar Canadian yesterday. at 133.35 or 34. I have to adjust my prices every day because I'm mark to market. I'm not on a retail platform where it just continues to hold my price. I actually have to re-input my price every day. Because my investors or anybody who trades on an institutional level really just cares what you're doing day to day. They don't care that you made a great trade 3 days ago. They want to know, what your mark to market every single day. So I have to re-input my information every single morning. But I did short the dollar Canadian yesterday right up here at the highs. So I've got a decent position going into the jobs report, and I have already my stops well before break even. So the dollar Canadian, I think we have to watch that because we closed below the breakout point here at 133.80. So I think if we close back below 133.50 today, that would be pretty bullish the Canadian currency, or bearish the dollar Canadian. Now I also I'm playing the Canadian yen on the long side because the Canadian yen hit, and this was our chart of the day yesterday, but if you were ForexAnalytix subscriber, the active pattern play went when we were at 83.80, as we were coming right into this trend line right here. And I'm like, that's very manageable risk. You have a risk below, the stops, or below the support here. You got a trend line, and we were oversold at the time. So you can see how important, this is a multi-year trend line, by the way, how important this level is. Now, the caveat to like the Canadian right now is that you have this OPEC meeting, and by the way, from what we're reading right now, as far as there's a deal, there's no deal. If there's a deal, it's the cut is not as much as it should be. Iran's in, Iran's out. This OPEC meeting is a real big circus show today. So, but what I've noticed with crude, just keeping an eye on crude, not so much on the currencies around it, or like the Canadian or the Norwegian krona, or crude actually it bounced on the initial headline, but it's holding up pretty well. And as long as we hold above 50, I think that's that's what everybody's probably watching at this point as far as crude goes. So as long as crude holds above 50, I think that's fine if you're trading the Canadian on the long side like I am. Well, we'll see after the Canadian and the U.S. jobs reports here in the next 12 minutes or so, but because that could obviously change the picture. I mean, the dollar Canadian could literally break out above 134.50 here in a few minutes. So, and stop me out. But just if it wasn't Canadian and U.S. jobs report, I mean, we'd just be watching crude, and crude right now is holding up as it stands. I mean, OPEC's got to make a cut here, and if they make a cut, that's going to support prices. They had to, agree to just produce less, and get more bang for the buck, if you will, as far as crude goes. So we'll be watching crude very carefully, especially following the jobs reports. But going back to the Canadian, I feel more comfortable about the U.S. dollar Canadian about being short if the pair trades back below 133.50, 133.60, and you got this little head and shoulder pattern here, of course, but really it all hinges on getting below this support through here. This is all going to be very important support for the bulls, and then if for some reason, if let's say we do see a reversal in the dollar Canadian, then you're going to be looking at a much bigger double top, false breakout that should lead to a breakdown. I don't want to get ahead of myself here because I can see the opportunity and the potential of it. I'm not excited unless we get and close it below 133.50. Then then it starts looking really rosy as far as this big double top here, you know, big double top through here, and then whoops, I didn't mean to do that. Let's flip that back. Okay, and I'm screwing up this chart. So anyway, a big possible double top here, but we have to get much lower. Last but not least, the dollar yen. So, you know, equities, and I'm gonna talk a little bit about the S&P. So the S&P hit this and I tweeted this out yesterday. I mean, we hit this long-term trend line, and we pushed just below the lows yesterday and then bounced. And knowing that the dollar yen did not break down below this support, I was like, oh, this equity market's going to bounce. And that's what also cued me in to buy the Canadian yen, by the way. It was, you know, a multitude of things, but, you know, S&P held that long-term support. Okay. Dollar yen.
Contrarian you, Blake Morrow.
Well, the dollar yen wasn't breaking down, right? The dollar yen, I mean, it did exactly what the S&P did. I mean, look,
it was still hard to buy something that would end up being risk on at one point yesterday.
It was. I mean,
that's what I mean.
You had to wait up, you know, until we got back to 1240, right? So, you know, you pushed below these lows on an hourly basis.
Cleaned up the stops.
Yep. S&P, same thing.
Yeah.
Right. Same thing.
Yep.
Cleared out the stops, went below the trend line, and then started to reverse. And once that all happened, and you started to see the bids come in, I was like, man, this dollar yen didn't reverse, and that was my cue. It's like, okay, time to get long the Canadian yen, knowing what I knew about OPEC was happening, and I thought a cut would already have been announced already. But anyway, those are just some things that I'm paying attention to now. Again, I'm going to reiterate before I turn it over to Steve and Stelios this morning. We're in a really tight range, a big triangle consolidation. And if you look at the euro, if we start stalling above 114 or we start stalling down at 113, in my opinion, don't get aggressive chasing into these levels, you know, because if we here, let me just grab a arrow. We get up here to 114 and we start to stall, or, you know, we get down here to 113 and we start to stall. You got to realize there's so much support and so much, you know, support, so much resistance through here that we need a real clean break by the end of the day, above or below, to get directional. So
yeah, Steve would say, Blake, that a formation like this statistically is going to move in the direction of the prior trend.
Yeah. So in this case, it would be lower.
Yeah, was that a pretty good interpretation, Steve?
It is, and then you'll hear other people will say that triangle patterns like this are terminal too. So if we break down,
that's one more spike.
There might be another spike lower, and then that'll be it. You know, and that's entirely possible today. It's you know, I definitely can't rule that out. So, but I've seen them happen both directions. I mean, you know, when you're dealing with triangles, you're dealing with more of a 50-50 chance, maybe 55-45 chance. So it's not like, you know, 90% of the time I see it happen this way. I mean, I've been looking at, you know, the markets for, you know, trading them like for over 20 years, and I've seen it, you know, every which way but sideways, you know.
Yeah.
So,
well, you know, I did a Vulcan mind meld with Steve Volge.
Good.
And I had to let go, Blake. It was so painful.
You should have. I mean, it would have destroyed you.
Yeah.
the brainwaves coming through. So speaking of the Vulcan brainwaves, Steve, how are you doing today?
I'm good, mate. But by the way, I'm not so enthusiastic about looking this as a symmetrical triangle, simply because the price action that precedes it is not like a clear downtrend. So if we were talking about this triangle that, you know, developed after a strong move lower, yes, in this case, I was like, if you remember, Coach, I was very certain that there will be a continuation
Hey,
lower.
Steve, while you're explaining that, I gotta go. I gotta get rolling. So, hey, you guys, good luck today.
Okay, Blake, good luck.
to you,
Good luck, bro.
All right, see you guys later.
All right. Okay, bro.
But the price action that has followed what we've seen here
It's
is
grinding.
Yeah, it's grinding. So in this case, I'm not really treating this so much as a symmetrical triangle, but just as a consolidation, and I really don't have a strong bias one way or another. I think, there is an equally good chance that it can move to the upside, and seeing the rest of the dollar pairs and how hard of a time the dollar has lately had in sustaining the upside momentum. We were showing the DXY yesterday and the day before yesterday. I would really not be surprised at all if Euro USD pushed higher, for at least a period of time. Now, regardless, if it pushes lower, yes, I'm not going to be looking for a big continuation. I can tell you that much, because as we had said when we were looking at the DXY, even if the DXY manages to hold this pattern and it pushes higher, I don't believe that it's going to push higher more than once again before a deeper correction lower. So either Euro USD breaks to the upside from where we currently are, or perhaps it can, as you said, it can violate the downside, for a short period of time, get a lot of people emotionally involved to building positions short at the worst possible point in time. So, looking at the medium-term picture, I would say that I'm expecting DXY to correct lower, even if that happens after a thrust higher. Now, seeing the seeing how the data come out from the US lately, I would have to say that intuitively, if I had to bet on what kind of a surprise the NFPs might produce today, I would say that the chances are higher for a negative surprise. So personally, I think that there are somewhat of higher chances of seeing the print come lower than the market is currently expecting. Stelio, I think that the market is expecting 200K for the NFPs.
That is correct, 200K NFPs. Unemployment unchanged, obviously. We also have average hourly earnings, which is important.
Which is important indeed. So if I had to guess lower or higher than the 200K, I wouldn't even think about it. I would go for lower, right? Although don't forget that
Holidays.
There is also very frequent, Coach, that we get an initial number that gets strongly revised, either higher or lower afterwards. So to be honest, the first print doesn't say that much. I mean, we've seen prints that are good being revised to moderate. We've seen moderate prints being revised to good. So, but as I said, I think the chances are tilted for a lower print. We've seen weakening of economic data, although employment is usually a lagging indicator. So you might see, usually you see other things turning around, which we've already seen, like auto industry, home builders, inventory of unsold houses, etc., etc. At some point, inevitably, the job numbers are going to follow. And don't forget that every single time that we've gone into a recession, when you go in a recession, you go from a very low unemployment, and usually when the recession is over, you start from a very high unemployment. I'm saying that because counterintuitively, I'm saying that because counterintuitively, I've heard some people that even go out in channels, speak about, the economy and speaking about the employment as being a leading indicator, like, how can we go in a recession with 3.7% unemployment? What do you mean? You're going to go in a recession with low unemployment. You're actually going to finish the recession with a very high unemployment rate. That's how it always happens. You're going to go in a recession with very high stock prices. You're going to finish a recession with very low stock prices. That's how it always works out. And you hear some people that they're even getting paid to give opinions that haven't even realized, or anyhow they're probably they're probably
numbers are out. 155 and also revision
there you
low,
go.
237 lower than 250. So the revision is also lower.
Good
Very
guess,
good.
Steve.
Canadian, look at the Canadian numbers. Oh my God. That's really
There
strong
you
employment
go.
numbers.
Gold's popping
There
to
you
recent
go.
highs
There it
here.
is.
Average hourly earnings slight miss on the month-to-month basis. So yeah, not very good numbers.
That's why big reversal. Good trade for Blake here. I liked his trade because yes, we saw a fatigued move higher. I was expecting that we can definitely go to 135.50 to 136, but we might do it from lower. I did expect, as I said before, that the chances are tilted towards weaker employment numbers, and I do think that these might actually be the data that will break the dollar's recent trend higher. So this might be the catalyst for us to see a lower dollar and perhaps a continuation of the rebound that we saw near the end of the day yesterday in stocks. Depends, though, how the market wants to take it, because as I remind you, and I said that yesterday very clearly, the market was expecting two things supposedly that would help equities recover. One of them was a more dovish Fed, and the second one would be some relief in the U.S.-China relations. Right? We got both of those, and despite positive news on both aspects, the market seems to be worried. I forgot to mention yesterday, and it would be good if we had Blake here because he has a. Stelio, see if you can pull that up or ask it from Blake on Skype, please. If you
Which
can pull
one?
it up. We forgot to mention, Stelio, that we've actually already had an inversion of the yield curve up to 5 years of maturities. So,
Yes.
the market is starting to get really worried because the yield has not inverted completely, but already the short end of the yield up to 5-year notes has inverted. And, in almost in every case that we had inversion of the yield curve, that was preceding a recession, and definitely that's not good news, right? And the reason why that happened is the following: by the Fed changing the rhetoric, they in essence put a ceiling in the short-term rates, because when they started now saying that we're very close to the neutral rate of what is now considered like a neutral rate of for the Fed funds rate, in essence they put a ceiling somewhere like between 250 to 75, somewhere there. So the 2-year yields or the up to 1-year bills are obviously not going to go above that, right? Which means that if we get any strengthening of the bonds that follow that, we're going to see an inversion, and that can easily happen if the market starts pricing in a slowdown and the Fed needing to cut rates. So we're seeing a breakup in the Euro USD, as you see from this trend line. If we go to the USD Swiss, you know that I've had a short position here while we were consolidating, because this was an obvious B, at least B, if not a 2, we'll see, in my opinion. So USD Swiss, I think, is going to confirm today the breakdown from this pattern. Obviously, the pound has held once again this support. I wouldn't be jumping on the pound for obvious reasons. But as you see, there is a good chance that the USD index, the DXY index, is going to confirm today the break below this channel. We see an acceleration already. Let's see what the USD yen is doing, because I have a feeling that the USD yen might also today confirm. Yesterday, it was about to, at some point, it was showing like a very high likelihood that it's going to close below this trend line support, but it did recover to barely close right on it. If we do see, though, today, another push lower, I doubt it that it's going to avoid it for a second consecutive day. So if we see continued USD weakness, let's see how crude and the metals are responding to the data. So let's have a look at WTI. WTI at the highs of the day. I think that we might see another push higher towards 55. That's where I would be booking half of my position. Let's see what gold is doing here. And as you see, gold is getting very nicely bid. We were very adamant about it. I was very clear. I was looking for a confirmation that we're going to have another leg higher, and Greg has said the exact same thing. I was looking for this descending trend line resistance. Once we cleared it, as you see, gold never looked back. I think 1260 is a very nice target area, and I don't see any big resistance until we reach that point. Let's see what silver is doing. Silver still underperforming. Silver still has to clear this descending trend line, but you might not even see this as a descending trend line, because it depends on how you want to see it. You might even see it as a rectangle, because depends, it's not so written in stone, depends on how you want to draw it. Somebody can look this as a rectangle as well. So this is one interpretation, this is the other. One thing is for sure, if this rectangle breaks to the upside, then we trigger a triple bottom formation, in which case you would expect an extension of the same height. So this is, this rectangle has a height of, let's see, 1480 roughly to 30. So it's $1, in which case you would expect a move higher towards 1580 if we close on a daily closing basis above 1480. Anyhow, silver underperforming. So if you want to have some exposure to one of the metals, why not doing with gold? Why not go with the stronger of the two? Now let's see other markets and what they're doing. So far, we've seen a little bit of a recovery from the overnight lows in the S&P, but not too much. I wouldn't be really surprised if we see a big recovery and we
getting pretty good wicks on euro up at resistance, a pretty good wick on gold, diverging on a third drive. Just saying, Steve, some pretty good wicks, and so far the dollar has held 96.40. So you're right, it's do or die here, man. But people sold into this stuff. They sold that euro rally. They sold the gold rally. You know what I mean?
I totally know what you mean, and I think we need to wait a little bit longer, because you've seen the market very often. It needs some time to digest the data, interpret the data, decide how it wants to interpret the data. Because, for example, now we have okay, so this is more economy negative data. So now the market needs to decide, okay, are we more worried by the fact that the clouds have started gathering up and they point to a possible recession, in which case we shouldn't keep on interpreting negative news as positive, because a more dovish Fed might not be enough to actually save the day? Or should we have a little bit more faith that this cycle can go for a little bit longer, as long as the Fed remains more lax in monetary policy?
And
in
maybe,
which case
it's counterintuitive. Most people think that would be bearish, the dollar, but normally currencies and economies weaken more during a tightening cycle, right? So if things are going to let up on that end, it might keep the dollar strength and the economic strength, like you said, stretch it out another few quarters.
Let's see. I'm quite hesitant. I'm quite hesitant. I mean, I'm pretty pessimistic. But yes, it is doable. It is doable. I mean, we can, one way or another, we can see this getting pushed forward, a couple of quarters or whatever. But there are a lot of indications out there that are showing, a clear slowdown. And something, Coach, when you have a clear slowdown after such a prolonged business cycle,
it surprises people.
That's one aspect. That's one aspect of it. The other aspect of it is, you've run out of good reasons to keep it going. You know what I mean? I mean, the economy has already run, its natural cycle. It has prolonged it due to extraordinary monetary conditions, and it's running on fumes now, right? And we need to see how long that's going to last. Anyhow,
time will tell.
Yeah, time will tell, but I think we're going to know rather soon.
Okay.
Okay. Λοιπόν, let's see what else we have here. So let's have a look at a few of the yen pairs. Euro yen still consolidating here. I'm really eager to see which way this one is going to break, because I do think we're going to have some follow through. I wanted to show it yesterday. I forgot to do so. So, Euro yen, obviously, a consolidation here. We did mention a few days ago, if you remember, that I was expecting a rebound. If you remember, we said be very careful in sorting weakness in the euro and pound crosses, and look what has happened since. Look at euro Aussie. I mean, huge rebound here in the euro Aussie. It's back now.
Steve, sorry to interrupt for 1 second.
Absolutely. Absolutely.
We just got confirmation that the OPEC are cutting 1.2 million barrels, and Iran is not participating. So that's why oil is now up to what, 53.6 or whatever it is.
Oh, yeah,
it's going. It's really going now.
I have no objection since I have a position being long, right? If they want to cut more by the end of the day, if they want to change their mind, I'm absolutely fine with that. Tell them. By the way, I do think that we're going to make it here, at least at 55. And just to tell you something in advance, I'm pretty sure that there are a lot of stops here at around 55 of weak shorts, of people that got involved at the worst possible place in being short. So I do think that if we take out 55 and we close above it at some point, I don't know if that's going to be today, rather unlikely, not impossible, but rather unlikely. But I do think that if we actually take 55, then we should see at least 58, at least this high up here, if not a little bit higher. So you can see it from here. This is a nice support resistance area. I think we can make it all the way up there. So, I'm happy I've built a position. My cost average is at 52.70, so I'm now $1 in the money, and I'm really looking to see higher prices. As I said, I'll take half of it off at 55, but I'm going to keep the rest because I do think we can see 58 to 58.50 print. So let's see what else we get. Let's see euro. Okay, yeah, I was talking about euros, by the way. Yeah, an obvious rebound has started here. I would be very, very careful here in euro Aussie. This is a strong support resistance area, which means that I think that I don't think that the rebound is over, but I think that ideally you would want to hope for a pullback before getting involved to the upside if you want to get involved for a second leg higher, right? So be a little bit careful with euro Aussie here. Big recovery in a very, very short period of time. Let's have a look at Euro Kiwi. Euro Kiwi, as we're talking, trying to take out finally this descending channel. So Euro Kiwi is obviously lagging, and we explained the other day why that is the case, because Aussie Kiwi has broken to the downside, which means that you should expect the Kiwi to overperform the Aussie. So if you're looking for a position that requires you to decide if you want to bet on Aussie or Kiwi being more weak, you should go for the Aussie. Pound Aussie already broken above this channel as well. Perhaps it's going to come down now, retest this area before higher. And Pound Kiwi, obviously, not rebounding as much. This is actually what we were looking when we were up there. We perfectly tagged the support area. Now we're retesting previous support resistance as resistance again. Obviously, the rebound is weaker than the equivalent in the Pound Aussie. But as I was saying when Gregor was here, in my opinion, if you wanted to choose, and I said that before we saw the extent of the rebound, and I got vindicated in that. If you wanted to see a rebound, I think that the Euro Aussie was your best bet, and indeed the Euro Aussie has produced the biggest reaction higher. Let's have a look at the Pound Yen as well. Pound Yen, in my opinion, there is a good chance that it has broken lower from this triangle, but on the other hand, I'm a little bit cautious still. Why? Because it's still holding this horizontal support resistance area. So for me to feel more confident about, opening up a lot more downside, I want to see this 143 area being taken out. I want to see a daily close below 142.90, 143. Then I'm going to start looking lower once again. Brexit might obviously cause the next leg lower. Same deal as with the cable. I'm still of the opinion that the cable has a much higher chance of pushing lower once again before some bigger recovery starts taking place here. So definitely, if I had to be something, the cable short or long, in the short term it would be short, but I will be looking for a spike lower and a big shift. I mean, a big extreme in sentiment, everybody turning like massively bearish again, because I think that's going to provide us with a nice opportunity to finally buy the pair for a big rebound, because when the whole market is going to be looking lower, I think that's when the cable will have the ability to produce some rebound much bigger than the market would be expecting. Of course, some kind of news is going to end up triggering that, but you can't know in advance what the catalyst is going to be. Regardless, now that some time has passed, we see that the dollar, has already pared back its losses, and it's more or less unchanged on the day. So we need to see what's going to happen from here. If I had to bet, I would say that, if I had to bet,
it's a beach ball. Remember, Blake would say that about the yen?
It is a beach ball, but I have to say that now that we have retraced the vast majority of the previous losses that we had intraday, coach, personally, I would be looking to sell here. So if I was a short-term trader, I would be looking to sell into this reaction after the initial reaction. So, I don't see the reason why I should continue higher. Although, as I said, this is not my specialty. I don't like trading intraday. So, for various reasons, because, Dow, for those of you that don't know, Dow is identified. There is no objection on that. Everybody agrees on that. He's the first person that actually developed the basis of technical analysis. He's also the first person that created an index to monitor stocks. He's also the first person that realized that divergence is an important indicator. So not only Dow established, and Hamilton after him continued on building what is now called the Dow theory, because Hamilton actually put the principles that Dow had established in a rule set. Okay, so the reason I'm saying that is Dow was one of the important elements of Dow's theory was that trends are what is more important, the primary trends. He defined the market moves are primary trends, secondary trends, and minor trends. So what he was saying is that anything that goes below a secondary trend is just noise. So according to Dow, the intraday movements, etc., that's noise, and that's something you shouldn't get involved with. I'm not saying that somebody cannot be profitable in being a short-term trader. We know many of them, as an example. Paul is one of them, right? Blake is one of them, etc. But I'm saying that the shorter term the time frame is, the more noise you get. There is no question about that, right? So I'm a proponent of looking a little bit longer term, because you see much cleaner moves, and you actually phase out the noise and anything like the news bombs and anything else that can actually destroy a position that other than that has sound basis. So coach, you know very well that Dow, since I mentioned it by the way, Dow also established the concept of divergence because he realized he had built the railway index back then, which was a portion of the Dow Jones index. And the whole concept with that was the following, is that if the Dow railroad index, which now has been renamed as transportation, because back then, transportation was much more isolated in the railroad. So the whole concept
he showed me all this stuff over lunch.
Yeah, the whole concept was that if items are being produced but they start not getting transported that much, it shows that demand has started waning. So a divergence that shows that industries are still producing, but on the other hand, production goods are not being transferred that much, in essence is a leading indicator that something is wrong. And that was the basis of the first concept of divergence we ever had in the markets. And it's very well proved that one of the most important elements that works long term in technical trading is the concept of divergences. Several types of divergences: volume divergences, breadth divergences, momentum divergences. That's why we pay so close attention to RSI indicators. Of course, the longer the time frame, the higher the higher the significance of the signal. As you see, everything has gone to unchanged. The dollar is now selling off a little bit more than before. You see, when I told you I would have sold when it was at break even, it seems to be moving lower once again. But the market doesn't really want to do much. What doesn't surprise me, as I said before, is I thought that the lower print for now might be interpreted as stock positive, and we do see that now the S&P has completely recovered the losses that it had overnight. So this might be the catalyst for somewhat of a higher stock prices. But I think we need to give it a little bit more time. Dollar doesn't seem to be in a rush to actually make any strong moves. By the way, Stelio, one more thing. I was checking yesterday. If you can please have a look, the market actually had started pricing out even a single rate hike in 2019. Can you please have a look at the figures and tell me what the market is now pricing in for 2019?
That was 2020, where they're going to be cutting.
No. They had started done pricing also yesterday. At some point, we had started pricing out the possibility of even a single rate hike in 2019. Because until a few days,
there's still one fully priced in.
One fully.
So, January 19 to January 20 Fed funds difference is about it's 25 basis points. So one priced in.
One. Okay.
December is fully priced in, and then one more into 19. And then after that, although Fed fund futures are very liquid out there, after that we're actually going slightly negative. So just a couple of basis points.
Yeah, which shows that even the market doesn't believe that we're going to last more than another year before the next recession. That's what the market is currently pricing in. But I think the market will probably end up being wrong. I think it's going to be sooner than that. So let's see if we have any questions. OPEC cutting 1-2. Yeah, thank you. Yeah, it's what Stelios said. OPEC cut 1.2 million. Iran agreed just came in. Kerem says. Okay, I'm going to take any questions for any pairs you want to have a look at. Let me see.
What a great guy.
Who do you have for an interview, by the way, today, Coach?
Mr. Moon.
Oh, you have Mr. Moon. Okay, the solar eclipse, etc.
Norm Winsky, Moon Man.
By the way, Coach, you remember the other day that we were checking copper that was actually at that moment of the webinar testing resistance?
Yeah, broke down.
You see what happened from there. So, still, I favor the probability of a continuation lower in the copper. This is very, very clearly,
Dr.
quite
Copper.
an impulsive. Tack.
Yeah,
that's what
Dr. Copper.
Yeah.
He has a PhD in economics. Copper is about construction and building.
Yeah.
And gold's about destruction.
As you said.
You like that? And you know what, Steve? The S&Ps, I mean, it's been a great day trader, scalpers market. But, it also reminds me, you have to say this is very violent action, right? Violent. And there is an expression that markets top with violence and bottom in silence. And if this isn't violent market price action. I heard a guy say we moved 14% in 2 days or 2 weeks, and it's never happened. You know, they're talking about the algos again. You know, they were great when they compressed volatility, but it's like,
absolutely.
you know,
Absolutely.
but now the beast, you know, broke out of its cage, and now they're blaming them. The SEC should have done more.
I love the fact that every time that the market slowly grinds higher during those tedious years that we had, like a slow, uptrending move.
Yeah, VIX to 10 to 12, 10 to 12.
Everybody was like, you know, algos, they're very nice. They provide liquidity to the market, et cetera, and ETFs. And, you know, when things start breaking down, you know, when we move higher, it's not due to algos or ETFs. They're just doing a good job. When we move lower, you know, strongly, then suddenly, you know, perhaps it's not the market that's that weak. It's perhaps the stupid algos and the ETFs that are doing the damage. You know, you can have it both ways. So but they want to have it both ways, right?
Scapegoat.
Yeah, exactly.
So Norm is here if you answered everything.
Yeah, I think, you know, we need to monitor more the market. If Norm is here, go ahead and, you know, start the interview. So,
okay, buddy.
Thank you very much for a nice week, and, you know, we'll be here next week as well, of course.
Yeah, great job this week, team.
Enjoy the interview. Thank you, Coach.
Great job, Steve, Stell, Blake, Grega, who was here when I was taking the day off, and Andre showed up. What a great team. So, Norm, hi, buddy. I believe this is a new moon. So now I know why you picked this day. Am I right? New moon man? Waiting to hear you.
Hello? Can you hear me?
Norm. Yeah, hear you loud and clear.
Oh, all right.
Happy Hanukkah.
Share my screen. All right, there we go. Get my notes up there. Hold on a second.
I hope you get some Hanukkah gelt from this interview.
Well, yes, sir.
Look at that.
Union. Can you see my notes, Dale?
Got it. Yeah, you're starting with Feb cattle on first chart.
Okay. All right, you can see that. All right. So are we good to go now? You might.
Yeah, Norm is a former SIBO member. Went there as a young man, left as a young man. You know, just used to scalp. Got interested in astrology in college. He's one of one of the best in covering. He knows Gann, he knows a lot, but what he does for people is he simplifies his reversal points in his newsletter. So if you're interested in how planets affect market behavior, Norm's a great teacher. So take it away, buddy.
Thank you, Dale. Thanks for having me on your show. All right.
You're welcome.
So because Dale is so popular, and you got to book months in advance. I thought, man, you wouldn't mind going if I went back a few weeks and I showed you where there was a lot of planetary activity, and so we could get more practice and seeing some more cases of things, you know. So
yeah,
anyway,
it's up to 6 months. No, it's up to 6.
What's that again?
I'm booked 6 months in advance now.
Okay. All right.
I'm just kidding, man.
You're gonna. All right. And I was gonna say maybe you can get Elvis on, you know. All right. All right. I'm gonna start with back around Thanksgiving time there, and this is what I had in my letter back in the end of November, and so one of the interesting things that happened back then. I usually don't talk about things that are not financially related because it's all about making money, you know. But one of the things I listed here, and there, you know, there's multi-facets to astrological interpretation. On the afternoon of the 20th of November, we had there's something called a natal chart. That's a snapshot of when things begin, like when you were born, or if we start a country, you know, that kind of thing. And so we have the U.S. natal chart. We take a snapshot of the planets at that moment. And our country was founded
on July 4th, 1776.
I see that you did not sleep through history class there, Dale, right?
Yeah. So
Okay,
that's the birth of the U.S.
right. So what happened on the 20th of November, the planet Saturn, that's a 29.5-year cycle. We divide our circle, our pie into 12 slices, equal
Yeah.
parts. So
Right.
the eighth house is you can Google it. I did this just to make sure that I would be telling you right. You can Google it. If you put in astrological eighth house, it'll tell you that's the house of death. And Saturn entered the eighth house back on the 20th. And Saturn's also representative of a senior, highly respected person. And guess what? We had one of our highly respected people pass away within 10 days of that.
Oh yeah. Okay.
So kind of interesting.
Yeah.
All right, now off to making money. Okay, so now I have item B here. We have my top things are when planets, due to the rolling motion of the Earth, planets look like from here on Earth. If you go out and plot the night sky, you would notice due to relative motion. That's the key. How things look relative to where we are. It looks like the planets actually stop their motion occasionally, individually, and then reverse the direction. It's like if you're driving your car and you're doing 60, and then you look out your side window, and if you glance out your side window, you might get the impression that you're going backwards if somebody passes you. Okay, well that's what happens here with the Earth, where all the planets are going around the sun at different speeds. And so if we look out in the night sky, we might be passing somebody, or they might be passing us, and gives you the impression that planet has momentarily stopped its motion and then reverses its direction. When it stops its motion, that's called a station point. And there's two kinds of station points. One that stop to go forward, that's called stationary direct, and one that stop to go backwards, that's called stationary retrograde. The other top thing that I like is the planets go around the sun like horses on a carousel. They go around and around, and they also go up and down. And when they get to that midpoint of the up and down portion, that's zero latitude, and that seems a very, very important point also for the markets respond to that too. Okay, so that's what the kind of things we're going to be focus on. Plus the moon, obviously, we're going to be pay attention to if we have a new moon or full moon, which we had just had last night. Okay. So back on the 21st, after the close, that would be over Thanksgiving holiday there. We had Venus hit 0 north latitude. We're going to look at the markets that are associated with Venus. One of them is cattle. And what we're looking for is a market, one of these markets that's indicated that if it gets to an extreme in that time window, there's a good chance it will reverse. And that means that we can make some money. And so there we go. So there's cattle as indicated, and there you go. Here's what happened. You're near the top, a little short-term top there, the cattle. And I think I pulled back about 3 handles, and you might remember being on the CME there, Dale. I think that's good for about $400 per handle, right?
Right. How do you know when to cover?
You just have to use some good trade management rules,
Like trail a stop, or do you have any
trailing stop, or if you get a nice clean, we don't really have an easy example here for the cattle, but let's go make one up here now. Let's say you're going up, like over here. Can you see my mouse? Okay, my hand. All right. So here we got a nice clean trend there. You draw let's say you're long here at the bottom, and you're going up. Draw a line.
Draw a trend line. Yeah.
Draw a little trend line underneath there. As soon as you break the trend line, you're gone. You're WD gone, Dale.
Yeah, I like that. WD gone. Okay. All right. Probably not a lot of cattle traders in here, but your point is that they work on every instrument. Your work.
Right. Well, you'll see.
Any instrument.
I'm going to go through quite a few markets here, but just to answer your question about trade management, one of my little models I teach my students is we don't give the money back.
Yeah. You know what, Norm? Hillary Clinton made a lot of money in cattle, and she didn't know astrology. She made a lot of money because she read an article in the Wall Street Journal. That's what
Well,
you said.
I think you're tongue in cheek there, right, Dale?
Yeah, a little bit. Yeah, that's all you need to do. It's read the
I
journal.
think she got a little help. I think she got a little help, maybe. You know.
Yeah, yeah.
All
I
right.
think they
Anyway,
call them.
another
All right, go ahead. Sorry, I'm not allowed to be political. Anyway.
Yep.
I hear
All
myself
right.
echoing.
Anyway,
Turn the
another
volume
market
down in your
associated-
room.
Me?
Yeah, if you have the volume on, well, just go ahead. I don't want to mess it up. Go ahead.
All right. Another planet associated with Venus is copper. As you can see, you had an opportunity there to sell the copper near that little short-term top, and it dropped from about 78 to about 72, and that's 6 cents times 250, about I think that's about $1,500 there. Ka-ching, you know. Here's your cotton. You're buying the cotton, and it went down into our window. So then you're going to buy it there. And the difference between that bar and the next bar, which was the low, was 2 little pennies, not the big pennies, the little pennies. That's about $10 out of your wallet is the difference there. You know?
Okay, I asked you how you know when to take profits. How do you protect yourself on a buying cotton like that? Use a money stop?
Well, use some kind of reasonable stop, you know, right?
Yeah, like a penny or something like that.
Yeah.
Risk a penny.
That'd be
see what happens.
That's $500, right?
Yeah.
Then we rallied up from 77 to looks like almost 82. That's 5 cents. That's $2,500 potential there. You see?
Yeah.
All right. The best trade of all was probably my biggest change in trend window of the last several months was back right around Thanksgiving. We're looking at this period, so we had a huge pileup of top-notch planetary events. Plus, we had a full moon.
I could vouch for it because Norm sends me his stuff every day.
Yeah, there you go.
That's a great call.
Thank you, Dale. And Dale will testify, right, Dale?
Yes.
Okay,
I will put my hand on.
I thought you might want to jump in and go.
My head. Huh?
I want to jump in and go. I'll testify. Okay.
You know, I'll go to Robert Mueller later.
Okay. All right. Anyway, so this was the big window here. The stock market has gone down into Thanksgiving there. It's not supposed to do that, you know, Dale, because if you know anything about the stock market and seasonals, this is supposed to be one of the most bullish 1 to 2 day windows of the year, right?
Well, I got to push back then. Why the old Wall Street adage, the bears feast on Thanksgiving and the bulls feast on Christmas?
I've never heard of that before.
Write it down and use it next year if your moon lines up.
All right. No, I think this, if you go look at the statistics, that I think right before Thanksgiving it's supposed to be bullish, you know.
Oh, okay.
But most of the holidays tend to be bullish, you know, right before the holidays.
I think that adage came from somewhere.
Okay.
All right. I didn't make it.
All right. Anyway, we went down there. We made a low there right on that Friday, the 23rd. That was a full moon that you know, just after the midnight on the 23rd. We made our low that morning. And then we had 180 point, roughly, you know, not exactly, but somewhere in the neighborhood of 180 handle rally. For those who are not familiar with the S&P, if you're trading the S&P mini future contract, that would be $9,000 in about 10 calendar days.
So to yesterday's action, the full moon was last night. So the new moon was last night. So it could have qualified as a reversal point for you.
Right. Well, we're going to get to that. You're
Plus, you know, we had the day off with the day of mourning. Plus, we had a national holiday on Wednesday. So
right.
Does that sometimes throw off your dates when things like that happen?
Sometimes.
Okay.
Okay.
They don't happen often.
Another Venus market is sugar, looking for a low here right around that Thanksgiving time, and this one at the red arrow because that did not work. So the market went lower 2 days later. I kept that as a miss. You will see a pattern here, though. The misses tend to be very small misses, small money, and that the gains tend to be big gains. So that's good.
So that's another rule I know you have. you brought it up, that from your turning point, you'll give it 48 hours to work.
One day. 1 day.
1 day? Okay.
I got to be right within 1 day, or it's wrong.
Okay, got it.
Here, sugar went 2 days later. It made a lower low. That's bad.
Okay.
That's not sweet, you know. Here's the wheat, did the same thing, 2 days lower, 2 days later, it made a lower low, and so you're out, you know. So you took a small loss. You know, we're talking very small losses on these 2 trades there. Here's your corn. Corn acted. Corn, we're looking for a low within a day. This is based on, now we're in a different grouping now. Now we're looking at moon trades. This is based on the full moon back there around the 21st, 23rd, you know, because of Thanksgiving. And we're looking, the full moon was on the Friday the 23rd, and the next day, corn makes a nice low, and then goes up, 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 up,
You
up,
told
up,
me
you know?
this lunar stuff works best in grains. Is that still your belief?
Well, one of my little sayings is, if you don't want to use your brains, trade the grains.
I like that. All right.
Okay.
Yeah.
Also works pretty well for the currencies. I had one of my students likes to trade the currencies. He's mostly a day trader, but about twice a month, you know, full moon, new moon, he jumps in there and does a little currency trade, because they usually work pretty well with the moon. Okay. All right, there's your corn. Beans, even better. Look at that. Boom. Here's your low, and moved straight up from there. T-bonds made a little bit of a top there, not big money, a little bit of money, about a handle or so on the T-bonds top. Here's your gold. I bet a lot of your folks like to track the gold. There's a little top there on the gold, and you pulled back from about 35 area to about 20, about 15 handles. Okay, here's your euro. Did not behave, and so that was a miss. Now we're going to look at, we had a big, you know, cluster, so we had multiple cycles all pile up, so we have some repetition here. And so we already looked at some of these, but there's your corn. We already looked at that, looked at the beans. I looked at the stocks, and we looked at the wheat. And then the other big thing that happened then was that Neptune, and it was going to turn direct, so I was looking for a low in the oil, which had been going down, down, down. And there you go. I was off of just a tiny bit here. A couple of days later, it went a little bit lower, and so that turned out to be a miss. You know.
Okay.
All right, there we go. We got one or two more markets to go for the pass, and then you get this. Will get good practice. So when we look at the future, you'll know what to do. Here's silver. That was a good one there, right around the same time to go long silver. All right, now this is the dynamite page here, Dale. That's going to knock your socks off, and you're going to learn a lot from this page, I think. Okay, this is taken from my. I don't know if you ever heard of the Bradley model or not, but that's what you're going to be. This is sort of my version of that, where you add up the planetary events of the month, and plot them on a graph, and then try to make a forecast. Here's what happened.
Which one's
here.
the Bradley? The blue lines of Bradley?
The forecast is the blue line, and the black bars are the S&P 10-minute bar chart. Notice how the S&P topped in November right on the new moon. The new moon was on the 7th. That's the actual high was on the 7th. We pulled back, went back up, and a real retest on the 8th, and then we went pretty sharply down. The last couple of days makes this looks like a Sunday school picnic. Back then, that looked pretty significant, you know?
Yeah.
Okay. So anyway, we went down, down, down. Then the next big event was that Venus was going to go direct. Well, the market bottomed just ahead of Venus direct, rallied right to exactly that weekend of the 16th, I believe. Mercury was turning retrograde, and the market tops. You were talking earlier about that the algos were running the market. Look at this chart. Are these the algos? Because these are the guys that are running the market. The Mercury turns retrograde, the market tops, and then we go down into
they may have it coded in the algo, the Bradley model, and so forth. Yeah.
You ever heard of Renaissance? You know who Renaissance is?
Yeah.
Renaissance is one of the largest hedge funds in the world.
Yeah.
They have, go look at it in Wikipedia, they list that one of the people that they hire on their staff there are astrophysicists.
Wow. Okay.
So
They
they
have a
could
nice
have this stuff in
budget.
there for 'em. What's that?
They have a nice budget.
Yeah, exactly.
For
I think
Dell.
they even managing about 35 bill or so, you know,
Yeah.
plus or minus a little bit, you know.
Yeah. We
All
don't
right,
have to
there we
worry
go. We
about
topped
that.
in. They can you got free bagels there, you know. All right, you got Mercury. You got Mercury returning the retrograde. The market tops there. We go down into my big cluster right around Thanksgiving. Full moon on Friday the 23rd. Look what happens. We bottom right there. And then we take off for 180 handles on the S&P. Okay, so you know if you're not watching this planetary stuff in the moon, you're trade blind, in my opinion. You might as well go to Vegas and at least get a free drink or a free meal out of it. You know.
Well, you're not objective.
Why is that?
You're biased towards your work. Doesn't mean that everyone
No,
else is blind.
Dale, this is
I'm telling you, I'm not blind.
This is
I once was
indisputable
blind,
stuff
but
here.
now I see. I'm not saying it's not great
Yep.
stuff, but there's many ways to skin a cat.
Okay, fine, but my point is, this is all objective, empirical information. I have nothing to do with any of this.
I know.
Okay?
Yeah.
They can go, by the way, I know some of this stuff is after the fact. You can go Google this stuff and you'll find out that I can't change these dates.
Yeah.
You know? I have nothing to do with it. Okay?
Well, you discovered, you noticed it through observation that it was a very effective model.
Yeah,
right?
exactly. And it was,
And then you could and you lay over your planetary work at these turning points, and it probably gives you even more conviction about the turn. How about that?
I think it's the other way around. I try not to think and let the planets tell me what to do.
Okay.
The less
Good
you
interview.
think, the better you'll do. Dale,
Yeah.
you're an old veteran. You know, when it comes to trading, the less you think, the better you will do. Thinking is dangerous to your financial health. I know that.
Yeah,
Right?
I think so.
Okay. I believe that the human brain is I believe that the human brain. I believe that the human brain is wired to lose money. You know, so the less we use it, the better you'll do.
Okay.
Okay. All right. Anyway, that's some little examples there of how well this stuff works. Amazingly well. And if you were to learn this stuff, you would probably greatly improve your market timing. All right. So here's what we have now. Last night we had Mercury turn direct. Okay. That's the opposite of Mercury just turning retrograde. Mercury goes retrograde about 3 times a year for about 21 days. So that's where we're at now, Mercury. And when one of these planets turning retrograde or direct lines up with a full moon, with a new moon or full moon, like we had back on the 23rd, we had these major planetary events all lined up with the full moon. You can see what the potential is there. 180 handles on the S&P is huge, right?
It is huge.
Yeah. So there we go. We had Mercury turning direct last night. This stuff usually works within one trading day. We could have maybe had a bottom yesterday. It's possible. I'm a little disturbed that the big rally on the close, when it does that sort of thing, it sort of like takes some of the wind out of the sails, and this thing may end up failing not too long, you know, maybe a little bit down the road, you know. But for now, we got a low in, I think, and we got a new moon. We had a new moon last night, and these things are all lined up. So you want to, on your Mercury, it was in Scorpio, in the sign Scorpio. So you want to look at your Mercury markets are your greens, and then also because it's in Scorpio, you want to be able to take a look. This is going to be your shopping list, folks. So doesn't mean that you trade these. You look at your charts to see which of these markets are at an extreme. The bigger the extreme, the bigger the potential opportunity. It's Newton's law. For every action, there's an opposite and equal reaction. So these are the ones that have the ones that the biggest extreme have the greatest potential for a big reversal and for you to make some nice money. If it's stuck in the middle, take a pass, right?
Yep.
All right, so there's corn, there's your grains, hogs, and bonds, and your grains. Okay, that's then we have the new moon. Moon is also your grains, your precious metals, your financials. Notice I have FX there for your foreign currency, and so forth. So that's your shopping list. Write down this shopping list. Look at your charts tonight. See if there's something that looks, appetizing.
Okay, like you're going to show the dollar. So there are no extremes. It's moving sideways in this triangle that you're showing. So that means that you don't do anything in there because you don't have a trend.
Exactly, dude. You got to see how simple this is.
Yeah.
Other times we had these nice ups and downs in the dollar. I think several of these would turned right on a moon. There. I think that's probably a moon there in early October, right? In the middle of October, I think that was probably a moon, and so forth.
Yep.
Here, I think I'm pretty sure that was a moon right there with the around the 7th of November. That was a new moon. You see, they had a nice low there, but it doesn't work every time. Unfortunately, not perfect.
Yep.
But when they do line up nicely, then you got something good.
Mm-hmm.
Okay. And then next week we have a big cycle cluster for the U.S., which means we want to be watching your U.S. stocks, T-bonds, and U.S. dollar. That'll be lasting for a couple of days. And then it's all going to reverse on the 12th. So go the other way, okay? So that's pretty much it for the near future here. Give me a call. I got a free class. I put these in just because I know your folks like foreign currency. So there's your dollar, like you mentioned. The yen looks a little more appetizing because it's got a little bit of a trend here to the top of its range. You see that?
Yeah.
It just touched the top of its range yesterday, right?
Right.
And I don't know, this is probably upside down from how your folks see the market because I'm doing futures,
Right.
What's that?
Correct.
It's probably inverted, right?
Yeah,
But it's the same idea.
Right.
All right, now I've been, as you mentioned, Dale, I've been doing this for about 50 years, and including 12 years on the Chicago floor. I was on the CBOE and the Board of Trade, and I guess I got a little bit of experience, and so I teach my knowledge in my letter in about a 6-hour free class, and 1-to-1, and you basically get a college education for traders in about 6 hours, and I'll teach you how I do these. My stuff looks complicated, but you latched right onto it, Dale. You said, "Oh, look at the dollars getting in a narrow range," or you probably don't want to do anything. You caught right on. So I'm telling you, there's nothing here that you can't learn quickly. And if you don't have to be smarter than a 5th grader to do this stuff, Dale, I promise you, there's no fancy formulas, no algos. I couldn't do that. If that's what this was, that would be way over my head,
Yeah.
I'm just a regular guy. I had
do what you know or learn from the best. Do what you know or learn from the best. That's what I say.
Okay, I agree with that. And hopefully I'm the best, right? But we'll see.
You're a great planet guy.
What's that again?
You're a great planet guy for your niche. You're very good.
Right. And I don't know if anybody out there ever thought about studying Gann, but Mr. Gann was an astrologer. That's the big secret, So there you go. Now the secret's out.
Okay, so this is Norm's contact information here.
Yes, sir. There it is. Yeah, I'm in chilly Florida. It's a little chilly here in Florida today. I actually got my heater on.
You better go cover up the orange trees.
Yeah, I don't have any orange trees. I do have a mango tree. Got a mango tree in my backyard. Every couple of years we get the mangoes. There's my phone number, 239-594-3939. If you're in the good old USA, or you can email me, nwinski@mbarkmail.com, or you can call me on Skype at norm.winski. Looking forward to helping some of your folks, Dale. I think they will greatly enjoy this. I try to make it entertaining and educational, and most of my people are, after a few days of practicing what I teach them, are making money at this,
Well, Norm, I want to thank you for coming in, and wish you a great holiday season and a healthy, prosperous new year.
Thank you. You too, and to your folks and all your listeners there, happy holidays.
Thank you, Norm. Everyone,
By the
Norm
way,
Winsky.
One last thing, I didn't mention it, but I also teach day trading, and that's been very successful too. So this, for anybody interested in like day trading the S&P, you know, the wild and crazy S&P. You know.
Yeah, it's a day trader's paradise right now. So
Exactly.
have a great weekend, Norm. Thanks for sharing your dates. Past performance is not indicative of future results, and thanks for sharing some future dates for a style ball. Okay, buddy?
Great.
All right,
Look
man.
forward to being on again.
Yep.
Okay, take care. Thanks a lot.
All right, have a great weekend. Thank you. And that's going to be our week wrapping up right here, Face. Don't forget to sign up. The weekends are the best time to immerse yourself in ForexAnalytix and all the great analysis there as well. All week, I try and bring guests into Face that could also be part of your intelligence gathering, education, potential trading ideas, and it's our mission to build up and edify traders every day. So don't just count your pips, count your blessings. Have a great weekend. See everyone on Monday. Adios.